Hi, this is Alvin from Dr. Wealth. I have a confession to make. That is the last video when I talk about Alibaba delisting and I laid out 4 options for investors. I've made one mistake that one option is no longer valid. So I want to make this video to clarify that position and so that you really have a more accurate picture of what's going on. So the example I was using that I thought it was a precedent for Alibaba to follow was TT. Okay, because both TT and Alibaba were put on this HFCA list. Okay, it stands for Holding Foreign Companies Accountable Act. This is the act that is causing a lot of hoo-ha among investors who are invested in Chinese companies that are listed in the US because on the note that a lot of these companies are not disclosing their books, they are not opening up their accounting, auditing for checks, and that's why the US are taking some measures, right, to have the power to delete this company if they refuse to disclose their books. So that is what the act is all about in a nutshell. And this TT was on the list and eventually it was delisted, which I mentioned in the previous video, right? And it transited to trade in the OTC market 2 weeks after the delisting. So these are the facts, these are still true, but the fact of it is that the delisting of TT was not due to this HFCA Act. It is because it volunteered to delist. And why they volunteered to delist is that because of the mounting pressure from the Chinese government on TT. Okay, because TT is a ride hailer like Uber in China, and they have a lot of data and information about the passengers and the riders in the country. So Chinese government felt that it wasn't comfortable with TT disclosing this sensitive information to the public or to the foreign investors, the US in this case. So that is why TT probably thought that it's better that they delist from US to save the trouble and to regain that trust from the Chinese government because they operate there, right? So they just delisted. Okay, so it is a voluntary delisting. It is not due to the HFCA Act. And if we look at the HFCA Act in more detail, right, look at the bottom, the lowest red line sentence, right? So what it's trying to say here is that the SEC has the power to delist the company, not just from the main boards like your NYSE or NASDAQ. It can even boot you out of the OTC market if they want to. Okay, so which means that even if a stock get delisted from the main exchange, my assumption in the previous video was that Alibaba would still be traded on the OTC market and life goes on. But apparently that is not the case. Very likely due to this rule, they will be kicked of out of US altogether, okay, including the OTC market. So by holding the OTC stocks may not save you either. Okay, so that is the big clarification I want to make over here. But that's a good news is that if you look at the notice period is about 3 years. So even though Alibaba is added to this HFCA list, A list, it still has 3 years to comply, right? To have a chance to satisfy the US authorities that their books are clean, their books are open, the transparency is there. So it is still early, right? It's still got 3 more years to go, and that's the good news, which means you don't need to panic. Okay. And if you look at the very first batch of Chinese companies that was in this list was added in March 2022 this year, and which means the very first batch will still have until 2025 and see what happens to them. So at this point in time, there is no company that was delisted based on this HFCAA, and we have no precedents in this case. What can happen? All right. So it is safer to assume that if a stock runs out near the is at the end of its expiry and they still haven't satisfied the authority, it is safe to assume that they will be booted out of the US stock market, including the OTC markets. Okay, so holding OTC shares will not save you either. And another thing is that Alibaba has also came out with an announcement and said that they will try their best to stay listed in both US and Hong Kong. They have the intention to do so, right? They are not going to give up. They are still going to see whether they can open up their books to the foreign investors and to satisfy the authorities. So we still have quite many years to go, and that's why I don't think that we need to have a knee-jerk reaction to this delisting threat that is just added to the list. I think there was a big commotion over it, right? But it doesn't mean that Alibaba is going to delist next week, next month, next year, right? It's still got a good 3 years to go. A lot of things can happen, right? There's a lot of uncertainty. Yeah, we don't know what will happen, but you are not in a rush to get rid of Alibaba at this point in time. And I want to recap the options, right? So I gave 4 options to investors in the last video, and I think that these 4 options, 3 of them are still valid. Only the last one is not, because the OTC option is not a good option because they can get delisted as well. So the first 3 options are the same, right? Just to recap, the first option is that you can convert your Alibaba shares that is listed in the US to the one that's listed in Hong Kong. Okay, so the ticker in US is BABA, and then the ticker in Hong Kong is 9988. They are fungible, which means you can convert one to the other and vice versa. So one BABA share is equivalent to 89988 shares. So that's what you can do. But based on my interaction with some of the investors, the broker was telling them that it costs about $500 to make the conversion. So which means if your Alibaba position is not in the 6-figure digit kind of position size, then maybe paying $500 is just too exorbitant. Okay, so you might want to choose option 2, which is to sell the BABA shares in the US, and then you use the proceeds to buy the one that's in Hong Kong. There should be minimal forex losses because Hong Kong dollar is pegged to US dollars, and because these stocks are fungible, that means that their spread should be also very minimal as well. Okay, so number 3 is that if you have given up with Alibaba, you say I'm enough, dealing with all these heart attacks. Okay, I don't want to deal with it anymore. You can just sell Alibaba, right, and can just deploy your money elsewhere. Okay, so that's still a valid option. And then option 4, which is different from the previous video, is that you cannot assume that you hold a share, you become OTC. Okay, even if you become OTC, you still be booted out of the market anyway, right, under the HFCA authorities. So number 4, in this case, I replace it with, if you are confident that within these 3 years, Alibaba is able to satisfy the authority and stay listed, then there's no problem. And I think with this newfound information, a lot of people will tend to adopt number 4 if I'm not wrong. Okay, tell me in the comments if I'm wrong, right? So I would think that most would adopt a wait and see attitude, right? There's no rush. There's still 3 more years. Yeah, it's on the list, but it doesn't mean that it's going to be delisted anytime soon. So why panic? Okay, so I would think that most people would choose number 4. Tell me otherwise, right? So this is the big clarification I've made. I hope now you have a better picture of what's going on with Alibaba. And if you like this video, please give me a thumbs up and subscribe to this channel for more updates like this. Okay, I hope to make you a better investor, a smarter investor, and make better investment decisions, and of course make more money from the markets. So this is Alvin, and I'll see you again. Goodbye.